right, so we're seeing markets just slightly higher this morning to the tune of about 0.2%. We have a lot of story stocks, earnings season, and Box is a name that's moving almost 15% this morning. It's moving higher, had some good numbers, and joining me right now to cover this is Diane King Hall, host of Morning Movers. Good morning to you.
Yeah, good morning. Yeah, this is one of those stories that we like to hear in earnings season, a beat and raise for Box. So strong results for both its trailing quarter, and it sees clear skies ahead with regard to guidance for the current quarter and the full year. Adjusted EPS came in at 30 cents a share. Excuse me. The street was expecting 26 cents a share. So that was a beat. Revenue came in at more than $276 million. So it beat expectations on both the top and bottom line. Now, earnings were actually down year over year. That was partly due from this hit from its non-cash deferred tax expenses. They've raised their full year revenue outlook to the midpoint of $1.168 billion. So that's up from what they'd seen previously. For the current quarter, they're projecting revenue to come in at $290.5 million. That's above what analysts were expecting. Now, about a third of its revenue comes from outside the U.S., so there is a lift that they're getting from the foreign exchange rate, and it gives a lift to the outlook as well. They do have some momentum when it comes to AI. Their CEO, Aaron Levy, who's actually been here at the stock exchange before, he says AI is, quote, revolutionizing work and business. They've launched these Box AI agents, and that's for deep research, search, and data extraction within their platform. And then they also have this new enterprise advanced subscription that bundles AI tools with content management. So essentially that's being seen as a key growth driver here. In terms of the breakdown of some of their overall drivers in the recent quarters, you saw billings increase 27% year over year. So that was a big part of their strength. And then one of the things they've highlighted is that their services, their tools are used by nearly 70% of Fortune 500 companies. So they've got a broadening enterprise footprint. And you can see them actually pulling market share, Nicole, from their main competitor, Dropbox. Dropbox had been a heavyweight in this category, and where you see some deceleration of its momentum, Box is gaining that.
Yeah, with new AI offerings, topping estimates, good guidance, really soaring. I mean, and the stock has served its shareholders quite well. I mean, it has a gap higher today, but this was $24 about a year ago, and has just had really, if you look month to date, week to date, year to date, 1 year, you're going to see all up arrows.
And look, you have some analysts adjusting their rating on the stock off the back of this. Raymond James, more constructive. They're boosting their target to $42 a share. They're seeing strength in the enterprise advanced bundle. And in terms of other analysts, Morgan Stanley boosting their price target to $38 a share from $35. They are, though, equal weight on this, so they're kind of in the neutral camp when it comes to Box. RBC is increasing its price target, but they've got an underperform rating. Their price target is $24 a share, Nicole. So they actually are in the camp that are not so bullish on Box. So, you know, they're not in the buy camp here. Even though they've adjusted their rating a little bit higher, they don't see the momentum.
Right. All right. Up next, we're looking at Broadcom. Those shares are about 5% off the all-time highs. You had Melius making a reiteration of the buy rating there. Some of the thoughts.
Yeah, so Melius out reiterating its buy rating. They've got a $283 price target here. They have confidence in Broadcom's AI momentum, and just overall, another driver that they see is the positive impact from the VMware acquisition. So those are the drivers here. AI sales, they see XPUs and networking chips from Broadcom, a key driver, especially with these hyperscaler data centers, the big heavyweights when it comes to that category. The networking division, that makes up almost a third of revenue. They see that as a key growth engine as well. While they don't delineate how much of the VMware acquisition they expect to contribute, they expect it to contribute meaningfully overall to future revenue and earnings. And then they highlighted the gross margins that Broadcom has, 76%, more than 76%, and more than 40% revenue growth over the past year. They see that as a tailwind. 3 straight quarters of accelerating earnings growth. They see that as a tailwind as well. And they're not the only one who is more bullish. Mizuho raising their price target on Broadcom today to $300 a share from $250, and they've got an outperform rating, Nicole.
All right, that's a good one. And then we're watching CrowdStrike here. I saw Barclays with the overweight. So what are our thoughts here? I mean, this has been hovering around new highs.
It has, and it's made quite the recovery since that summer outage last year on CrowdStrike. So not a lot of movement in it at the moment today. Pretty range bound, as you mentioned. It's near those, reclaiming those highs. But Barclays is boosting its price target ahead of earnings. Their price target now they see as $500 a share from $475. They're maintaining overweight, which essentially is a buy rating on here. This comes ahead of CrowdStrike's earnings report. That's due June 3rd. Barclays modeling $175 million in net new annual recurring revenue. That's ARR. They see a bull case scenario, though, topping $200 million. So they see strong demand, even in the face of macro uncertainty. As you know, Nicole, this stock had been hammered last year after that Windows crash, but it has recovered majorly since then. I mean, it's now, even though we're kind of range bound right now, around $470 a share. So it's just shy of those all-time highs. So it shows just restored investor confidence and just operational resilience. It's quite the comeback story. The recovery playback here is they responded to that outage with enhanced software, safeguards, more update controls, and then, of course, they did some proactive customer engagement with those discounts they made. They were not going to give up market share as a result of that. And despite the scale of that disruption, they had 97% retention rate, gross retention rate. So
yeah, I mean, you mentioned the whole debacle with that global IT outage, which was huge, maybe the largest ever, and they really came back from that. And that was a big deal. So that's the big picture. Final thoughts on this day? Anything you wanted to add?
Yeah, look, analysts are still mostly bullish on CrowdStrike. And I mean, look, they've been the leader in their sector and they've had the pole position. And the way they handled that outage, just, I guess, you could see it as giving a playbook to the industry should something like that happen again. They do have some ongoing legal risks over their head. That Delta lawsuit still hanging over its head, but it has yet to dent the financials.
All right. Diane King Hall, great to see you. Thank you so much. We hit some good names there for you.